Over 90% of traders fail their prop firm evaluation, and honestly, it's not because their strategy is bad. It's because the prop firm rules are literally engineered to make you gamble. They want you to become impatient with time limits, over leverage to hit the profit target. But once you understand that the actual risk framework is about the institutional trading, you can beat them at their own game. So in this video, I'm giving you the exact rule by rule blueprint I used to pass my evaluation and secure a funded account without breaking a single drawdown limit. Let's get into. So basically, for passing the prop firm, you need to have your own edge. You need to have your rules. You need to have the trading strategy. You need to have a good psychology, and you need to see the things in the long term. The most important part is about making the trading journal. Coming to the rules, so you have to have the design rule. For example, even if you are taking a one step account or even if you are taking a two-step account, I'll suggest two-step account mostly for the beginners because it has more bandwidth in terms of the daily drawdown and the maximum drawdown. So, for example, if your daily drawdown is 4% just in case of the funding pip, so how you can do that? So the first thing is like you need to have your own rule. The first rule you need to stick is like always use a stop loss. The second you can make the rule like risk percentage, like you can risk 0.5% per trade or maybe 1% per trade, and you need to have the rule that you'll be only trading 2 to 3 quality setup per day irrespective of win or lose, just like a robot. The third is like you need to have the rule not to do the news trading. Like I completely agree that when you are a beginner, you want to achieve your profit goal quickly and all, but you need to understand that news trading is very difficult and very unpredictable. The best strategy for news trading is no trading. So in this way, you need to have your own rule. The second is about the technical. See, I don't give more focus on the technical. Many people talk about the indicator, about different bots, about different concept like ICT, smart money, about moving average, RSC diversion and all. But to be honest, you just need to have the understanding of the macroeconomic thing and about the charts. You can choose anything, means like even you can trade on basic support and resistance, or you can means like what you can do, you can mark 1 hour or 4 hour time frame support and resistance. You need to understand what is the market bias. For example, if you're trading on Mondays, then you should not enter directly into the market. You need to wait like what is the market bias, how it's behaving, and is there any fundamental news or something that can impact it. The second thing is like you need to go to the 1 hour or 4 hour time frame, or even you can go to the M15, but I highly suggest 1 hour and H1 and H4, and you mark support and resistance, and when there is a breakout you put your buy stop, when is a breakdown you put your sell stop. And otherwise, if you want to trade on moving average and all, then you can trade on basis of moving average. You need to have your strategy back tested. We will talk more about this in future. The most important thing is the discipline and the consistency. Most of the traders they fail because they become emotional. They do emotional and revenge trading, but you need to behave like a robot. Even if your setup is good and your strategy is good, but market will kick you out, and you have to accept that. You have to accept that there is no ego in trading, and there is no ego in the market. So you need to have the discipline. When you make your rule, you need to stick with that. You need to be consistent. You have to put that on your sticky note or on your table, and you'll tell yourself that no matter what, but I will not break my rules. Okay. For example, you made a profit, but you broke your rule, then it's not good for you. but you made a loss, but you were stick to your rule, then you were good. Okay. So about the technical, I said that you need to find your edge, and I suggest you to highly trade during the liquidity hours, which is NY open, or when London open, or when there is a overlap between London and New York, because otherwise there will be less liquidity and it will have very unexpected move. During the NY London and the overlap session, they have good liquidity and the moves are quite good. You need to stick to only 2 to 3 trade per day. For example, if you are risking 0.5% and you have two losses in one day, so you will not reach your daily drawdown. So this is the reason you need to have certain rules in place, and you should never risk more than 0.5 to 1% per trade. Otherwise, you will not be able to means like hold that account, because they are having only 4% or 5% daily drawdown. So it's better to make less profit but be more consistent. The psychology, I already told you that you need to have your edge. You need to find that what is the best point. Like there will be some people who are good in trading the basic support and resistance, like I told you about the H1 and H4. There will be some people who will be trading on basis of moving average. There will be some people who used to trade on RSI divergence. So you need to understand all these things, and you need to do the back testing, and you need to have your own rule about the risk per trade, about the lot size, consistency, and you also need to have a very strict rule on the overnight and weekend holding, because I don't suggest people to hold it overnight or weekend, because it's very risky. I mean, there is too many of the macroeconomical thing. You hold a trade if it's not in your control, because and you want in trading you want things to be predictable, or at least loss is something that is on you, means how much loss you want to take. But if you take a trade and you if you holded it, especially during weekend or overnight, and if there is a gap up or a gap down, so even if your stop loss is $5, but you will hit $10, $20, and you will easily breach your account. So that is the reason you need to give a very specific rule on that. And also about the news trading, some of the prop firms or most of the prop firm, they don't encourage news trading, and they don't even allow, means like some of them they have, like for the funding pip they have news trading allowed, but they have two rules. If you open the position before 5 minutes or after 5 minutes, then that's fine. But if you open the position within that time frame, then they will deduct the profit. The second is about if your position is for more than 5 hours, then the profit or loss book from that is perfectly fine. The main hurdle and the main mountain is about the execution and discipline. Most of the people, they have their edge, they have their rule, but they are not being able to execute it properly or being disciplined. So that will come with practice. So here is the final advice, that you do the back testing on the demo account. I do not advise you to go directly into the real account. Have the back testing for the 2 weeks or for 1 month, and then when you see your ROI, then you will be able to understand whether you become a resilient and consistent. So write down your age, make your own rule, do the back testing, discipline and consistency. And also keep in mind that in trading, most of the people, they say that you will make 50% profit per month, 20%, 25% per month. But the reality is, if you make a goal of 5% profit per month, then it's fair. Otherwise, it will become a hell for you. It's very challenging. If you are making 3 to 5% monthly gain on your portfolio, then trust me, you are doing very good. Okay. Even if you see the FTMO, even if you see the 5%, even if you see the funding pip, they have their scaling plan, because they have designed in that way. They are not looking for people who gamble, or they are not looking for people who make 10, 20 or 30% in a week or in a month. They don't want that. If you are making 3 to 4% or 5%, it's exceptional, because in a year you are making 60%. So if you see that in 5% is they have their bootcamp program where where they scale your account every at 5%. Even in FTMO they have designed the rule that every 4 months they will review your account, and if you achieve a 10% of milestone then they will scale your account, because they it's based on the historical data. Even in terms of funding PIP, they have the scaling plan where they will scale your account with 10% milestone. And when you go to their Prime account, they don't encourage you to take more than 2% risk on your account. So